U.S. trading is speeding up settlement of securities transactions. Investors will now have to finish their transactions in one business day, known as T1, instead of 2 business days. Joining us to talk about the change is Citi Index analyst Fiona Cincotta. Fiona, great to have you on the show. So we used to have T2 or T3 even. Now is T1. Why are the U.S. equity markets moving to an even shorter settlement cycle?
Yes, that's right. So actually, this is a settlement cycle that there was in process around 100 years ago. So back to it, basically what this means is that the trade is finalised so that the funds and the securities are delivered the following day. And that's down from 2 days. Now, the reason that you might this would be happening and is a good idea, because if we think of it like this, the settlement period, so that time is a time in which one or both of the parties to that trade could actually fail, in which case that brings risk to the trade. So if you manage to shorten that time, then the idea being that there should be less risk involved, less counterparty risk, less operational risk, less systemic risk. And the idea is that it would be a more efficient way of trading and a more transparent way of trading.
Well, Fiona, this is the first day for T2, and today is first day for T1. Sorry about that. And today is a double settlement day. Is this affecting the market?
So this is a double settlement day. It does mean that they're settling the trades from Friday as well as those from Tuesday. It's not affecting the market necessarily in the sense that we're not seeing increased volatility in share prices, but what we will see is a much larger volume of trades being settled. Now, I think this is a process that has happened before. So we have seen, obviously, it go from T3 to T2 and then from T2 to T1. That's what we'll be looking for. So we have heard that things are expected to go well. This is something that's being well planned for. So up to now, so good so far, but I think going forward we might see a few little hiccups with a potential for more failed trades, I think, in the short term.
So I'm wondering, how is this affecting investors outside the US, and what operational challenges does this pose for, let's say, European investors?
Yes, so I mean, if you think about Europe, you've got the disadvantage already of the time zone difference. Yeah. So if you're thinking about the UK, Germany, you've got, anywhere between 4 to 6 hours already that you're having to deal with. So settlement tasks, which previously they had 14 to 24 hours to deal with, now need to be done in 3. It's going to mean there's a potential for a change of hours needed in the UK, for example, or Europe's working day. But then on top of that, you've also got the FX transactional complication, which is settled T+2. So actually, these investors from the Eurozone, from Europe into the US, are going to need to source dollars much faster in order to get these trades to be settled.
Thank you very much. That is Citi Index analyst Fiona Cincotta. Thank you so much for your insight.